All right. Here we are with Eric Wall. Eric, welcome to the Defiant podcast. It's so great to have you.
Thank you very much, Camila. It's a pleasure to be here.
Yay. Okay, so Eric is the Chief Investment Officer of Arcane Assets. Eric will go all over the rainbow chart, which I think was your shot to fame, or at least Twitter fame. Lightning Network, ETH versus BTC, all of that's coming up. But I want to start with just getting your own background, how you got into crypto and what brought you to Arcane.
Okay, well, I'll try to keep it brief. I was a computer scientist student at the Lund University in Sweden, and I discovered Bitcoin. I heard about it in 2011, and then I made my first investment in 2012. And at my university, we were sort of covering the Tor network, so figuring out how the Tor network works, that sort of led me to the dark web and discovering Bitcoin, and finally made an investment in 2012. And then I started out actually as if I hadn't gone into computer science, I would probably have gone into finance. And with Bitcoin, I think I found an element that had overlaps from both, right? So it had both the computer science and the financial element. And also for me, it was like, this was an asset class with a clean slate that I could, like if I went into this asset and started to develop my experience and expertise within that domain, I assumed I could quite rapidly become one of the more knowledgeable people in the domain. So that was the first reaction, my initial thoughts, why I got into it. And I also wanted to understand how financial markets worked and how trading works. So that sort of led me astray actually for a couple of years, because I was between 2012 and 2014, I was heavily involved in the technical analysis domain. Those are the types of people that you see that publish, the charts with lines and the MACD indicators and the RSI indicators. And I was trying to use the same indicators that I saw that other prominent traders were using. And what happened was I got far enough into my computer science studies and learned sufficiently well to program that I was able to backtest my trading strategies that I had developed and learned from other traders. And that was kind of a point of disillusionment for me, because I discovered, like, from a statistical perspective, there wasn't a empirical basis for that the trading activities that I were actually like statistically profitable. So I started to ask other traders, like, do you have an empirical basis for using these indicators? And most of them did not, and it made me start to question the entire technical analysis domain when it comes to charting. And for some reason, I still somehow remained profitable. But what I understood was that there was always like a discretionary element that I brought into my trades. Like, there was something going on in the industry, and like, for example, there was I could see that there was some momentum building up around the Lightning Network that was finally going to solve the scalability issues for the Bitcoin network, and I read the white paper of the Lightning Network, and those types of signals in the market, like more items that are connected to reality, was something that I could trade on. So I eventually eliminated all the indicators, like chart-based, pattern-based trading, and now I take a lot of. I try to distance myself from everything that has to do with technical analysis and focus on fundamental analysis, sentiment-driven analysis. So I kind of started off as a trader, but also around 2014, I was a computer scientist student, and I had the ability at the Lund University to sort of choose which subjects were the most interesting to me. So I started to develop an understanding and seek out courses that would give me an understanding for the cryptographic primitives that underpin Bitcoin and blockchain technology in general. By the end of my studies in 2015, I wrote a master thesis about blockchain technology in general. Actually, it was about how to create a blockchain-based ledger for the securities settlement infrastructure domain. So how there's a specific component in stock settlement, a component called the central securities depository. This depository is where all the ownerships of stocks are registered all over the world. There's different ones depending on which region you are in the world. And I wrote the master thesis for a company that wanted to understand if they could make a blockchain-based central securities depository. So a way to track the ownerships of stocks using blockchain technology. So that's sort of how I got into the...
And do you think it can be done?
Well, in my master thesis, my angle into the question was that I wanted to make a public blockchain to address this problem, but there were regulatory requirements that I had to cater to. That, like in the end, what I was able to propose at that point in time was a sort of a side chain to Bitcoin. That was I described it as. Like it's important to try to, if you want, the only reason that you would want to blockchainify the securities depository in the first place is to build a larger network effect globally, so that you could have more, you could have central securities depositories from all over the world collaborating on the same database. So I wanted it to be as permissive as possible, but there would still be elements of permission. For example, one of the requirements that was put on the ledger that I was supposed to design was that you needed a way to fix errors, basically. So they didn't want the immutability aspect, which, well, so they wanted a collaborative database, but they wanted also a form of mutability to remain in the ledger system. But it was a very interesting master thesis, because it led me to sort of dig into the scripting language of Bitcoin, side chains, drive chains, also like how you facilitate decentralized derivatives trading using Ethereum as the underlying platform, and how you solve the Oracle problem. So many of the subchapters in the thesis are like they're multi-billion-dollar ideas right now. Like decentralized derivatives exchanges are now like if you look at DEX, for example, on Ethereum, that's exactly the concept that I was very early on discovering and mapping out in the thesis. And then with the Oracle problem, that's Chainlink today. Except that I didn't want to create an Oracle solution that needed a token. In my opinion, you don't necessarily need a token to be involved in paying for the data from the oracles, and that's been one of the reasons why me and the Chainlink army, like the Link Marines, we don't get along very well.
You're not very good friends.
No, we're not very good friends. And they actually laugh at me. They're like, Eric, like, look at your master thesis from 6 years ago. You discovered the Oracle problem, you had everything mapped out, and you didn't do anything about it. Now it's like a $20 billion idea, and you didn't cash in on that idea at all. And that was because I didn't want to build a token-based. Like for me, having a token to pay for Oracle data it just adds additional friction. To avoid getting too deep into the specifics of the master thesis, what later happened was that I got hired by the firm that I wrote the master thesis for. So that firm was called Cinnober, and not a lot of people know about this, but in the market technology domain, and when I'm talking about market technology, I'm talking about technology vendors that provide the infrastructure for tier 1 exchanges and clearinghouses around the world. So the most well-known player in that domain is NASDAQ. And NASDAQ actually have their market division, like their market technology division here in Stockholm. And their longest running competitor in the market technology domain was another company called Cinnober. And they had been competing with each other from the basis of Sweden in Stockholm for 20 years. So I was working for Cinnober, and I was hired there initially as someone to lead the blockchain, like the sort of enterprise blockchain vision at the company, and how to participate in what everyone thought would be a revolution for the financial. Well, not everyone. My job was sort of to convince and to lead the efforts at the company towards that direction. However, in my opinion, like having worked with many of the enterprise blockchain consortiums, I sort of quickly noticed two things. One of the things that I noticed was that it's very hard to build a enterprise blockchain for a large group of participants in the financial sector, because if you start with a very, very large network like R3, for instance, then you have these very big players that have very large demands, and they want sort of to decide on the direction of the evolution of the system, and all of them have to agree, right? All of them have to make the decisions together, which makes it a very slow process. And if you start smaller, like if you look at something like what IBM did with supply chain companies like Maersk, then they were very much faster moving, but the end product that they had delivered, it was very difficult to get buy-in from other participants later, because they looked at it like, this is IBM's solution. It's not something that's collaborative or decentralized or built from the entirety of an industry. So it was this kind of problem, like how do you bootstrap these types of enterprise networks? And what I also discovered, like this, the second thing that I realized when I was working on this was that, like, I got attracted to the cryptocurrency domain because I was very inspired by the fact that we were able to create entirely new asset classes, like cryptocurrencies as a store of value, cryptocurrencies as a medium of exchange. We are inventing new assets with very, very interesting properties. And through my master thesis, I sort of got sidetracked into starting to build synchronization layers for traditional enterprises, which wasn't at all the thing that I was passionate about. When I had that realization that I sort of got duped into this industry that didn't really appeal to me, to my passions, what I did was, and at that point in time, I had sort of gotten like full autonomy over the blockchain strategy at Cinnober. So we pivoted the strategy. Well, I pivoted the strategy of the company. Like, instead of trying to participate in the blockchain, not Bitcoin world, we published an article that said, well, it's Bitcoin, not blockchain. Like, Bitcoin is the interesting thing. And there were tons of centralized exchanges like Binance and Coinbase that were all of them struggling with capacity problems, like throughput problems. They didn't have the capacity to process the transactional loads that was put on them in 2017. And we had very, very fast matching engines. We had the fastest matching engine in the world at Cinnober at the time. So I thought, well, why don't we instead take the technology that we have and we deliver it to the cryptocurrency industry? And we did that. We did sell a matching engine to Bitstamp. Bitstamp now runs on that technology that we sold them today. And sort of parallel to that, I was also, I was still managing my own cryptocurrency portfolio that I had been doing since 2012. And I was always, this was a big deal for me, like managing this portfolio and discovering, like, when we went into the ICO era, there were tons of projects that were making outrageous claims about having solved the scalability trilemma, that they had infinite scalability, they were fully decentralized, and the user experience was impeccable, and they had zero fees. Like IOTA, for example, was one of those projects that I was, actually it was the head of the research department at my firm that dropped the IOTA white paper on my table and said, look at this. And he was sort of a cryptocurrency skeptic, but he put the IOTA white paper on my desk and he said, this is to me looks like some type of new innovation. This looks interesting. So I started to read about it, and like, in my mind, if there's a project that can promise infinite scalability, zero fees, and 100% decentralization, then I gotta run home and sell all my Bitcoin and buy this other asset, right? So this led me to do the nitty-gritty like investigation into these protocols, and I had the computer science background. I had been doing research in the blockchain technology domain for sufficient enough of a time that I was able to pinpoint the like fundamental problems and flaws and the differences in marketing and the reality. So this made me like to become a very angry person when I saw how like IOTA became the fifth most valued cryptocurrency in the entire market, and the entire system was controlled by a single node. So in the marketing material, it was 100% decentralized, but in reality, there was one node that controlled the entire project. So this was when I started to publish articles about the flaws that I would discover with different projects. And well, you mentioned that that the rainbow chart was the thing that made me rise to fame. But like from my perspective, it was the well, they gave me the moniker like the altcoin slayer, because I used to publish these pieces where I was slaying altcoins, and I was at the time also very much a Bitcoin maximalist, in the sense that I did believe that all the features and functionalities that you could build in altcoins, you could emulate the same. You could build in the same type of functionality in Bitcoin using second layers like drive chains and like the Lightning Network, for instance.
Do you still believe
later
that?
on? No, I don't, and that's been one of the reasons why I'm no longer a Bitcoin maximalist, because I understand that the Bitcoin scripting language is not expressive enough to have these layer 2 solutions that would be able to do all the smart contract logic. Like for instance, if you have a second layer to Bitcoin and you're running smart contracts on there, and you want the robustness and the strength of the consensus engine of the Bitcoin network to resolve disputes in the second layer, the Bitcoin scripting language is not expressive to detect and understand the syntax and the semantics of what's going on in these expressive second layers. So it fundamentally cannot act as this arbiter, like this judge, to settle those disputes. Whereas in Ethereum, where you have this expressive base layer, you actually can you can find invalid state transitions in very complex expressive second layers, which sort of invalidated my thesis that you could build any type of expressiveness on top of Bitcoin. You cannot today build any type of expressiveness on Bitcoin and still inherit all the strength from the consensus mechanism of Bitcoin. That's just not how the protocol works. So that's why I became like altcoin curious, in the sense that if I wanted to see a scalable DeFi platform emerge, you would need some type of expressiveness embedded into the base layer of the protocol, which is why Bitcoin maximalists now call me a shitcoiner. But they can call me a shitcoiner, but the question that I have for Bitcoin maximalists is like, show me a second layer to Bitcoin that inherits all of the trust assumptions, the security guarantees, the strength of the consensus mechanism, to expressive second layers for Bitcoin that also maintain a high degree of user experience, like good user experience, and a great deal amount of privacy. So Lightning doesn't have a great user experience in my end, because it's channel based. You have to have liquidity in your channels, and you can only interact with nodes that are also online. And the privacy is also lacking in the Lightning network. And if we could build like expressive, privacy focused, UX friendly second layers on top of Bitcoin, then I would return to my original thesis that we don't need altcoins. We can build everything as a second layer to Bitcoin, but as it currently stands, that doesn't look like it's going to become the most likely scenario, and that's what caused me to become a controversial figure within the Bitcoin community. unfortunately, I mean, there's both good and bad with that. I enjoy being parts of both communities and trying to be a bridge between them. Doesn't always work out in the end. It usually ends up with me getting hate from both the Ethereum and the Bitcoin community instead of trying to become a bridge.
I think I see you in a very unique space where you have the capacity of speaking with a lot of, just like very knowledgeably about many different cryptocurrencies. And I don't think a lot of, and very objectively, or at least like in my perception, pretty objectively about them. So you look at Ethereum and you can kind of describe the good and the bad on Ethereum, and same with Bitcoin. You can, say positive things about Cardano. You can, talk about different like cryptocurrencies. What I'm finding more and more in this space, and I think maybe it's because people just like tend to become specialized, right? They find a niche that they're interested in, and they start going down that rabbit hole, and then it's very hard for them to talk about anything else because they don't know enough about the other, the outside world to do that. So you start seeing all these kind of maximalists across all these different cryptocurrencies. So I think it's great actually that you can just like talk about many different blockchains with more or less, in an objective way. So you were kind of in the part of your story, like just before going into Arcane Asset. I'd imagine that was kind of your own portfolio that you turned into a hedge fund and a research company.
Yeah. So during my time at Cinnober, there were multiple There was a lot of interest from people within my surroundings and from other corners of the world that basically asked if I could manage if they could just copy the portfolio that I have so that I could manage the capital for them in the cryptocurrency space. So that led me down the track of trying to set up a structure for it so that I could just let them trade with their capital as if it was my own portfolio, and naturally that translates into a hedge fund is the most natural construction for that. So I had been working on setting up a hedge fund as a side project throughout 2017, 2018, but it wasn't until what basically happened right after we delivered the matching engine to Bitstamp, the stock price of Cinnober fell, and it didn't have anything to do with us delivering a matching engine to Bitstamp. It was because the company, Cinnober, the company, was trying to invest in many different verticals at the same time, many different business lines at the same time, and there were some insecurities in the market whether or not Cinnober's had whether or not it would be able to fund all these initiatives, or if the cash flow of the company's relatives to its expenditures was getting too strenuous. So the stock price of Cinnober fell as a result of people weren't sure that we were going to be around 5 years from now because of this overinvestment in these other verticals. So what Nasdaq did, like Cinnober had been the largest competitor to Nasdaq in providing market technology to exchanges and clearinghouses like the London Metal Exchange, the Australian Securities Exchange, so on and so forth. So they saw an opportunity to just outright acquire the entirety of Cinnober. But when they did that, I was brought into the Nasdaq blockchain team, and then the transition that I had been working on internally at Cinnober for a long time, which was Bitcoin not blockchain. In Nasdaq, they were back. It was back at it was back at blockchain not Bitcoin, and they were more interested in building enterprise blockchain solutions again. And I don't want to speak negatively about my past employer, but I didn't really find any elements of decentralization inherent in the products that Nasdaq was building. And one of the guarantees that Nasdaq, the company, gave us when they acquired Cinnober was that at Nasdaq you're never going to have more than 6 bosses above you. And I was, very used to just working with one or two bosses above me that understood, that I had a very good communication with, so that I could lead a strategy. So I wasn't comfortable getting, put into this massive organization with 6 bosses over me. And NASDAQ would also be looking at my tweets, because I was now part of the NASDAQ blockchain team, and they would be looking at my tweets and they would be saying like, Eric, what is this thing that you're doing on Twitter? Why are you fighting with these people? And I'm trying to tell them that, this has been like a 2-year argument with the IOTA people, and I'm finally going to be able to like put the dagger and twist it around, because I've finally been able to prove that the things that I've been saying critically about the protocol are going to. And they were like, no, you cannot be like aggressive towards people in the and I tried to explain, like, this is crypto Twitter, this is how it works, and people enjoy these types of, like, people understand and learn a lot from these back and forths between critics in the space and the founders. Like, tons of more information gets revealed through this process, and this is something that I'm very passionate about. Like, my goals are to help the cryptocurrency industry flourish as much as it can, and I wasn't willing to step down from that point and stop tweeting, and I couldn't accept having my tweets go through a review board. So they would want to review every single tweet that I wrote, and I would just keep tweeting, like, keeping on with the Twitter banter, and yeah, that didn't sit too well with the NASDAQ team. So they gave me a severance package and said, Eric, do you want the severance package instead? You can go on and tweet as ever you like. And I think that was actually a great opportunity for me to go back to actually launching this hedge fund that I had been wanting to launch. I said I took the severance package, kept tweeting the way that I wanted. And the first thing that I said to my new employer, Arcane, which was the company that I launched the hedge fund with, is that I said that nobody... my number one rule is do not interfere with the Twitter battles that I'm having, like, in the cryptocurrency domain. Like, that's where I live. That's my home. And, you're not going to take me out of, as long as you don't take me out of that, we're going to be good friends. So
that's amazing. Amazing story. Okay, here's a guy who chose crypto Twitter over NASDAQ. I think very good decision.
I don't regret the decision at all. I mean, just imagining having been at NASDAQ for the past 2 years during, or actually 3 years, during all of this, and, I wouldn't have been able to tweet the rainbow chart, for instance, right?
I mean, it would have been a great loss to the world. Okay, so now we can explain what this rainbow chart is.
Yeah, so the rainbow chart. So you do know about the stock to flow model for Bitcoin.
Can you explain it for everyone?
Yeah, so the stock to flow model for Bitcoin is a theory was popularized and actually created by a guy called Plan B. His Twitter handle is $100 trillion USD, and he made this theory that you could, just by looking at the issuance rate of Bitcoin, so how many Bitcoins are getting issued in each time period. So in the beginning of the Bitcoin system, you had 50 Bitcoins that were mined in each block. And then after the first halvening, which happens every 4 years, it drops down to 25 Bitcoins. And this translates into a concept called stock to flow. So you have a stock, which is all the existing Bitcoins that are currently in circulation. And then you have the flow, which is the relative amount of Bitcoins that are getting issued, new Bitcoins that are getting issued each year. So the relation between the existing stock and the new issuance, the flow, that's the stock to flow model. And what he made the argument for was that just by looking at the stock to flow ratio that evolves over time, as the stock grows and the flow halvens every 4 years, then you have this mathematical pattern that gives you an outline of the stock to flow ratio that's predetermined. It's been predetermined in Bitcoin from the start. And his thesis was that if you take the Bitcoin price history and you take the stock to flow ratio and you do a logarithmic regression with these variables, so you make a regression, so you combine the variables and you try to find a curve that fits both of these variables, then if you have a very high correlation between this mathematical formula that you get from this regression, the regression is just like the curve that describes the relationship between the price and the stock to flow. And if you have a very high correlation between these two variables, that if like the stock to flow ratio goes up and then the price goes up, if there's very high correlation between these two variables, then you can make the argument that the correlation is actually has a causal property. So it's actually the stock to flow that's
driving the price.
It's driving the price. And as I mentioned, I had been in the technical analysis domain for in between 2012 and 2014.
And
I did not find
believe in it anymore.
Yeah, I don't believe in it, and I have tested it. I back tested it many models like that in the past, and so when this. And this stock to flow model became immensely popular because people started to believe within the Bitcoin community that the price of Bitcoin was actually pre-programmed. Like we didn't have to, like, adoption or like people using Bitcoin or like nothing really mattered. The only thing that really mattered was that the stock to flow ratio kept going up, because if the stock to flow ratio keeps going up, then you had this regression formula that invited people to believe that it would cause the price to also go up. But in my opinion, that's not, you cannot make a prediction just based on this predetermined supply dynamic. You also have to look at the demand side, like how popular is Bitcoin as a phenomenon in the world? Are people getting more attracted to Bitcoin as a phenomenon, or are they getting less attracted? And if you look at the amounts of capital that Bitcoin attracts, it's a much more like the factor, like so demand can fluctuate with orders of magnitudes. Like when we're in a bull market, the demand fluctuates with orders of magnitudes, whereas the supply it shrinks for like the issuance rate shrinks from, like, let's say 3% a year to 1.5% a year to 0.75% a year. That's a very small issuance rate change that we're talking about in relative terms. Whereas in the demand side, we could have like 20 times more demand. And I think you have to look at the combination of supply and demand to be able to forecast or understand the trajectory of the Bitcoin price. So I try to argue like on Twitter with Plan B about the arguments that he was making for his model, and at that point in time, he had a statistician that was backing his model by using a concept called co-integration. And co-integration is a sort of statistical test that you can apply that tries to identify if one variable has a causal effect on another variable. And the initial analysis that this statistician made was that there was a causal relationship between stock to flow and price. So he said that stock to flow is the thing that is driving the Bitcoin price, and you can prove this using the co-integration test. And this was something that I took a lot of issue with because
isn't it true that there can be different causes to the price? Like, okay, so maybe the stock to flow does impact the price, but demand will also have an impact on the price. Like, it's not the only thing that predicts it.
Well, it goes even further to that. So what we eventually had to do was that So the person who invented that wrote the code for the co-integration test that the statistician Nick Emblow used, we brought him into the debate and we had him present at the conference called The Value of Bitcoin, and asked him the question if he saw any co-integration relationship between stock to flow and Bitcoin, and he said like flat out that this test has been applied completely incorrectly, because in co-integration what you need to see is that if one variable moves, the other variable moves also, but the stock to flow variable is deterministic. It cannot change. Like if the price of Bitcoin goes up, the stock to flow parameter doesn't change also. So the co-integration test that everyone in the Bitcoin community was using, you have these very prominent Bitcoin figures like Peter Chard, Peter Pish, all of these people that were trying to shove down people's throats that the price of Bitcoin was as a mathematical certainty. And I was getting very worried because you had all these retail people buying into this idea that the price of Bitcoin was predetermined. And I think you're just setting people up for a big disappointment and disaster. And how are we going to recover from this idea if it doesn't work out? So we had this the guy who wrote the command from the University of Exeter debunking the co-integration test. So what Plan B did was that he changed the model. So now it's not called the stock to flow model; it's called the stock to flow cross asset model now. So he changed it so that the criticisms that we had for the original model wouldn't apply to the new model that he made. But for me, what I tried to highlight was that you can take a variable, like any variable that is rising over time, and you can try to find a correlation between the rising Bitcoin price over time. And you're looking at this correlation metric called the R-squared variable that measures the correlation between the time series. So what we were able to discover is that there are multiple time series that have just as high or nearly as high correlation between the Bitcoin price as stock to flow does. So for instance, the Bitcoin supply growth, if you just look at the numbers of Bitcoin in circulation and you look at the Bitcoin price and you look at those time series, they have almost as high correlation as the stock to flow variable has. So and everyone knows that you cannot predict the price of Bitcoin by the number of Bitcoins that have been issued, right? That's a very dumb argument to make. But you had similar R2 squared, R squared properties for this correlation. So and we made tons of ridiculous other time series that are just arbitrary and could show that just because you have a high R2 variable doesn't mean that there's necessarily a causal element here. And the rainbow chart.
Could you try just like random data sets, like I don't know, number of babies born in the U.S. I don't know.
Yeah. So there's a guy called Marcel that was heavily involved in this debate who also knows a lot about econometrics, and he made a test. And this is a bit of a childish humor, but what he did was he said that, okay, let's imagine that Peter Griffin goes to the toilet between 1 or 3 times every day, and he takes a dump, and the cumulative amounts of times that Peter Griffin goes to the toilet as time passes, you could build a time series from that. It would be growing, every day between. You would add 1 or 3 number of dumps every day, and you took that time series, and he was able to find a just as high correlation between the Bitcoin price and as the stock to flow time series did. So for me, we're looking at the completely. What's happening with all these price theories in Bitcoin is that there's thousands of them, right? There's thousands of Bitcoin theories, statistical, price projections based on some type of math, some type of indicator. We see thousands of them, but there's a survivorship bias element here that, only some of them like statistically, like some of them are going to survive. Like some of them are going to get it right. But it doesn't mean that they're going to be right forever. It just means that they have been right, and they can be right for another year. They can be right for another 2 years. But there's nothing inherent. There's no element of truth from the universe that we can derive from this information. So the rainbow chart, in my opinion, like what the rainbow chart does is it just counts the number of days since the genesis block of Bitcoin, and then it correlates the number of days with the rise of the Bitcoin price. And it creates a logarithmic regression in the exact same way as the stock-to-flow model does. And it also has a very high R2 squared, like a R squared variable. And this is the rainbow chart. And this model, the rainbow chart model, was actually invented in 2014. On the Bitcoin talk forum, a user called Trollololo. So he made a model in 2014, and the model is still working now. 6 years later, the model is still working. And I'm saying, like, if you're creating a logarithmic regression on 2 time series, and the only thing that you care about is this, like how well it has functioned in the past. I mean, the rainbow has much longer history of being predictive and successful than the stock-to-flow model has. So if we reduce the theory down to its dumbest elements, then the rainbow chart is the superior model, because it doesn't add this fluffy, wishy-washy, that it actually is the change in the issuance rate that has a causal impact on the price. So it just dumps everything down, and it also has more colors than the stock-to-flow model does. Like stock-to-flow model, it's a very pretty chart. And what I tried to prove was that if I start to champion an even prettier chart that has a very nice looking graph, like if you look at the rainbow chart, like if you take a random person on the street and you look at the rainbow chart, just look at it, it's very easy to get convinced, like, oh my God, like why does this price move within the bands of this rainbow? Like, what's so magical about this rainbow? And of course, the rainbow is a curve fit. Like it's a curve that has been fitted on the Bitcoin price trajectory and then just extrapolated from that. So it's not like the rainbow
like
came from.
It's made to fit what's already happened. So it's like it makes you think, oh, this really has like a predictive value, but when it really doesn't.
Yeah, and the fantastic thing about the rainbow chart is that it's been working since 2014, but it is actually not fantastic, because there were thousands of models that were created like this. The rainbow chart just happens to be one of those that ended up, getting it right for another 7 years. So if you make 1,000 models, and so what I did was I just dug out the model that still worked and looked the prettiest, and then I made it as a competitive, like a challenger to the stock-to-flow model. And now when I'm looking at TikTok influencers, there are just as many people who are equally convinced by the rainbow chart as they are by the stock-to-flow model. So in my opinion, like mission complete, I was able to show that all this craze and interest around the stock-to-flow model, you can just as equally find the same amount. You can just as easily dupe people into believing in the rainbow chart. Then things kind of got out of hands, and I started to see like the rainbow chart being quoted everywhere, even in private banks' research papers. They were starting to use the rainbow chart as something for their clients to base their Bitcoin forecasts on. And that's when I said, I got to stop this, because I'm now just contributing to misleading the word into this.
Wanted to change.
Yeah, I wanted to defeat the stock-to-flow model, but by using a joke meme that made parody out of the stock model. But what happened instead was that people started to believe just equally much in the parody as the original, and we ended up fooling more people instead of making anybody saner. There were just a small clique of people on Twitter that understood what I was doing. So these days I try to keep the.
Have you just shut it down? Like when you see it, are you out there saying don't use it? Like it doesn't actually predict anything?
Yep. So there are so many people that love the rainbow chart just as a fun thing. So I get a lot of pressure to sometimes put up a picture of the like everyone's asking like, where are we in the rainbow chart right now? And sometimes I can't, resist the urge of, just showing them where we are in the rainbow chart, because the rainbow chart is fun. Like, it's inherently fun. But every time that I do that now, I try to caveat it with disclaimers, very long disclaimers that you should not take this as financial fact. So I try to be a bit more responsible with that now. But now I'm not sure if it was the right decision, because like Plan B, during this month, he has amassed another 350,000 followers to his stock to flow model. And so, I stopped leading people into the rainbow chart. But the only thing that happened now is that the stock to flow model is just getting massive traction, even though that the rainbow chart has been equally correct as the stock to flow model has. Even to this day, it's still like the same accuracy for both of the models. So yeah,
I guess
that's
like
sort of the
people
story.
will just like they'll want to have an easy thing to look at that they can believe. Oh, like this will give me some sort of indication of where the price is going, when in reality you can't have that sort of certainty in the market. So I guess like it's just like a natural thing that people will flock to, but I guess you can sleep with like a cleaner conscience, and that maybe should somehow or somewhat outweigh the 300,000 followers that Plan B has. But in general, like you still believe that technical analysis doesn't really work, and you continue looking at the fundamentals to drive your investment thesis.
Yeah, I mean the price of Bitcoin in the future is going to be determined by how many people and how much capital can we attract to this asset class. Like how does Bitcoin as a phenomenon throughout society propagate? Does it propagate very quickly and we attract tons of people from all over the world, from all walks of life, from wealth managers to retail people adopting it? Like, how powerful does the meme of Bitcoin become? That's really what's going to be the driver of the price of Bitcoin in the future. And also, of course, there's the regulatory regulatory side. Like, how are countries going to react to this? Like, if the G20, for instance, came together and made very aggressive regulation that made it very difficult to use Bitcoin in any fashion, or eliminated the privacy or criminalized it, then that would impact the price. But really, that's when I think about the Bitcoin price for the future, I think about what is adoption looking like, what are the trends that are propelling the adoption for Bitcoin, and how violent is the regulatory backlash going to be. And it's sort of the combination of those two things that really drives the price of Bitcoin, yeah. And also, of course, the aggressiveness of central banks printing dollar. Like if you look at the exchange rate between the Bitcoin and the dollar, you have to look at like how much is the dollar inflating. That also, of course, impacts the price. Yeah.
Sure. So you've said that you don't believe that Bitcoin's scripting language is powerful or flexible enough to support layer 2 solutions, which will in turn support a vibrant DeFi ecosystem, Web3 ecosystem. So what do you think Bitcoin's main use case will be? Like, how will it attract this adoption going forward?
So I still believe that like one of the most, or perhaps the most innovation that has come out of the cryptocurrency field is that we were able to create digital scarcity. Digital scarcity for an asset that acts as a bearer instrument. So a form of digital gold. This is the core innovation, in my opinion. DeFi is super interesting, but being able to create a monetary instrument that emulates the properties of gold, but is internet-based, transferable around the internet, that is scarce, and where the monetary supply is predictable and fixed, that is still one of the things that makes me the most excited about the entire cryptocurrency domain. So that's why I still describe myself as a Bitcoiner, because I think that this is one of the things that might have the most profound impacts on society overall. I still genuinely still believe that, and I think that the reason why it's important that Bitcoin doesn't become a failure, and this is a controversial point, and there's a lot of people that don't agree with me about this, is that like an asset class like gold maintains value over time, and it doesn't happen to gold that there's another precious metal that becomes gold 2.0. Gold has been the #1 precious metal to preserve value for thousands of years. And this is why it's viewed as a storehold of wealth. And the idea with cryptocurrency was that with Bitcoin, we were also able to create this storehold of wealth. Now, what happens then if another asset replaces Bitcoin? Like Ethereum, let's say that Ethereum becomes, people prefer to use Ethereum as a store of value instead. Well, for new people entering the space, are they really going to take like the store of value proposition of cryptocurrencies seriously, or are they going to ask themselves, well, Bitcoin got replaced by Ethereum. What's to say that in 10 years from now, Ethereum doesn't get replaced by Solana? And what's to say that 10 years from now, Solana doesn't get replaced by Cosmos? So is there really a store of value thesis that can be made here if the original invention, the original cryptocurrency innovation that enabled the concept of digital scarcity just gets replaced by something else? That's why I think it's very important that we keep fighting for developing Bitcoin into the direction where it stays competitive. So I'm very much in the camp where I still want Bitcoin to have second layers that have these attributes of privacy, expressiveness, and user friendliness, so that Bitcoin can stay competitive as a monetary asset compared to other assets like Ethereum. And I think that Bitcoin gets a lot of strength from being the first, from being having this anonymous founder. That like the Bitcoin brand is very like ethereal in the sense that it's not it's just like a commodity now. Like people don't think about where it actually came from. It's just like you could put Bitcoin like on the periodic table like an element there. It's like a digital precious metal, and I think that keeping that brand intact and keeping the story around Bitcoin and maintaining such that the monetary instrument of Bitcoin succeeds is very important if we want to be able to create a cohesive store of value thesis or store of value narrative for the cryptocurrency industry overall. If the store of value thesis fails, then I do think that it also harms the monetary thesis also, because a monetary asset that doesn't have a good store of value thesis behind it, you kind of need both. It needs to be a good medium of exchange, and it needs to be a good store of value. That's how we can build universal hard money, and that's how we can build, the Austrian economist's dream of a hard money asset. And I don't think that we are going to be able to be successful in enabling that vision if we have cryptocurrencies that keep overtaking each other. So that's the reason why I think that I'm still rooting and championing for Bitcoin. But I do also acknowledge that I think that Bitcoin needs to incorporate research advancements that we have made in other parts of the cryptocurrency industry. So I think that if you want to create a second layer to Bitcoin that is has good user experience, that has good scalability, and that has good privacy, then I think you're gonna have to use zero knowledge proofs. So a way to make that happen for Bitcoin then would be to add additional opcodes. So you would add opcodes to the Bitcoin scripting language that would be able to validate a Stark proof, for instance. So I've actually been in conversations with the Starkware team. If we could fork the Bitcoin code base, add a couple of if we could add a couple of opcodes that could validate Stark proofs, we could build something similar to ZK rollups on top of Bitcoin, and then we would get scalability and good user experience, and later on also possibly a very high degree of privacy if we keep developing that concept. And this could be something that could be potentially more powerful than the Lightning Network, and that's what I'm trying to get other Bitcoiners to get excited about. And for a long time, I've been getting just a lot of pushback, because what the Bitcoin maximalists see is that I'm going around in the Ethereum community and I'm taking all this crap, like all this vaporware back, and I'm trying to push it into Bitcoin. But if you actually speak to like there's the Bitcoin maximalist high priests that are very vocal on Twitter, and they think that some of them are relatively technical, some of them are not very technical at all, and they maintain some sort of a philosophy of how they should safeguard the protocol against shitcoinism. They don't understand that they're sometimes also guarding Bitcoin against valid technical ideas. But one thing that has made me optimistic, like recently, was that when I spoke with Eli from Starkware about making this opcode, introducing this opcode to validate Stark proofs in Bitcoin, Laulu from the Lightning development team he actually got very excited about this prospect, and he said that's something like he said that they would be willing to commit their resources to testing this thing out. So now I'm seeing, like, for the people that do actually understand the technology, they are very much more inclined to experiment with these technologies. So I'm getting a little bit more positive now that, like, if we can get the core developer Bitcoin community and the core researchers to embrace these ideas, then we could later see integrations of those ideas into Bitcoin, and then Bitcoin wouldn't need to be it wouldn't need to be in a situation where the second layers aren't at on par with what other smart contract platforms can facilitate in their second layers.
Interesting. Do you think, though, that I understand your argument about Bitcoin's use case as a store of value and digital gold, and for that it's important that it's not overtaken by other coins, because then it becomes that just proves that there is no reliable store of value in crypto, and it just hurts the entire space. So I get that point, but do you think that the Bitcoin needs to be competitive to other smart contract or to smart contract platforms to succeed? Can't it just succeed at being a good store of value, and then something like Ethereum can be a good smart contract platform, and applications can be built there, and maybe they don't need to be built on Bitcoin at all?
Exactly. So I think that that's also a way that you can look at this, so that Bitcoin can remain this very hard to change monetary asset with the branding and the immaculate conception and the immutability and the censorship resistant properties and the reluctance to incorporate untested upgrades, and it can remain a sound money. And then you can have Ethereum that's completely separate, that's just this wild, crazy cowboy town of DeFi that does financial innovation on a completely different scale than Bitcoin does. And those systems can exist in parallel. And you can actually, if you want to, you can create synthetic Bitcoin derivatives, of Bitcoin inside the Ethereum landscape. So if you wanted to use Bitcoin in a relatively trustless way, you can still do that with instruments like TBTC, stands for trustless BTC. So I think that these systems should be able to be mutualistic, not necessarily parasitic on each other. So I definitely see that. But the reason that we got into this argument is that the Ethereans are saying that Ether is sounder money than Bitcoin.
Yeah, I wanted to ask you that next. Like, what are your thoughts on this ultrasound money meme that says that ETH is better sound money than Bitcoin because of the whole kind of burning mechanism, and it becomes deflationary in the long term, theoretically. What's your take on that?
Yeah, and this goes back to like one of the reasons that I did not want people in the cryptocurrency industry to believe that the stock to flow variable was the only thing that was driving the price. If you believe in that, and then you compare Bitcoin and Ethereum, and then now Ethereum is going to have a stock to flow ratio that doesn't even, that it goes to infinity, and then it goes into the surreal number plane because the flow goes negative. So if you are just a person that cares about stock to flow, and then it turns out that after Ethereum migrates to proof of stake, and we have this large MEV burn, where we have a large amount of the transaction fees. Like there's I think there's like $48 million of transaction fees in Ethereum on every day. A lot of those gets burnt ever since EIP 1559, right? So if you do the simulations, I think a lot of people end up with it's probable that it could happen that the Ethereum supply shrinks with 2% every year. So if you look at the 25-year time span, where Bitcoin just let's imagine that Bitcoin is a fixed supply asset. It stays the supply stays fixed, and Ethereum is shrinking in supply by 2% each year. Now, Bitcoin should grow in value over time at the rate of GDP, at the rate of society becoming being more efficient and more productive. Then the value of currency, you should be able to buy more things when things gets cheaper to be produced, right? So Bitcoin would sort of just increase with GDP, so 3% each year, whereas the dollar would decrease with 3% every year because the central bank has the inflation target for the dollar to decrease with 2 to 3% every year. And if you look at the historical numbers, it's around 3% on average that the dollar loses in purchasing power. And so if you take these three currencies, Ethereum, Bitcoin, and the dollar, and you look at what the price evolution could be, and now we're just talking about that. Let's assume that there's no new demand, it's just a currency that all of us use, right? And there's no other factors here. If you just isolate this problem here, so the dollar would lose 50% of its value in 25 years, in less than 25 years. Bitcoin would double in value in less than 25 years. So the difference between the dollar and Bitcoin would be 4x. So we would have 4 times as much wealth if you had stored your wealth in Bitcoin instead of the dollar. And if you compare it to Ethereum, which is not only working in the same way as Bitcoin with having a fixed supply, but it actually shrinks the supply also, then Ethereum would be worth 6 times as much as the dollar. So if people would start to think about it this way, that I can get 4x return in 25 years by just using a scarce monetary asset, and if they then think a bit further and say, okay, well, if I have the shrinking supply asset, I don't only get 4x as much wealth, I get 6 times as much wealth. They might be inclined, that's why I think that the ultrasound money meme has legs. I think I generally think that it is a meme that is going to resonate with a lot of people, because not all people are going to be not all people are going to care about when you say, well, Satoshi Nakamoto was anonymous and then he disappeared, and Bitcoin had 0 value in the beginning, which allowed the currency to circulate, and Bitcoin didn't have any pre-mined. All of it was mined using proof of work. And I don't think that those arguments are going to resonate with everybody in the population. I think there are some people.
6x versus 4x is what is going to resonate.
Yeah, maybe that's the case. And there's more parts to it too. Like for some, there are some people that believe that proof of work is just a net it's just a net negative for society in terms of the environment. Bitcoiners believe, and I do agree with a lot of what the Bitcoiners have to say around that. I mean, Bitcoin is a buyer of it naturally mines using energy sources that couldn't be used for anything else, because that's the cheapest energy source. So it's not like Bitcoin is competing with the same energy sources as the things that are giving energy to cities and towns.
And it's not all fossil fuel driven either.
Renewables are the main category of energy sources that have where you have excess that you cannot do anything with. You usually just let it go. Like you either like you just have to throw it away basically. And Bitcoin can become the buyer of that energy, and I think that that's going to be so. When you are setting up a renewable energy farm, and sometimes we're going to have excess. What are we going to do about that with that excess? Are we going to put it into batteries? Batteries cost a lot of money. It's not like if you run the numbers, it's going to be costly to try to store that electricity in batteries. But if you just mine Bitcoin, then you now have a improved,
more productive,
more improved business model for your renewable extraction facility. So I do think that there's both good and bad things about Bitcoin mining, and I'm kind of leaning towards that it might actually be good. But I think that those arguments that I understand, that I'm one of the few people that in the world, relatively speaking, that will understand those arguments. Maybe the masses will just, like maybe Greta Thunberg says that Bitcoin is this energy thief, and it's causing the oceans to boil, and Ethereum is a proof of stake based asset that doesn't consume electricity, and the masses that don't have the time, so they get both the naive ESG friendly narrative, and they also get the 6x instead of the 4x. I think that might be a very powerful meme. So I think that Ethereum definitely can compete on those on that basis. Now the counter arguments will be, for like the people with a more sophisticated slant, like, okay, but isn't it very important that we have a lot of predictability in the monetary policy? Now, Ethereans will say that the predictability of the monetary policy in Bitcoin is false, because Bitcoiners don't actually know whether or not the protocol will be secure after the subsidies run out. Like right now, for instance, I mean the transaction fees in Bitcoin are they're not growing with the rate of adoption. Transaction fees are much lower now than they were a couple of months ago, even though that adoption is increasing. So can we even be sure that we're going to have very high transaction fees that are able to secure the protocol? So for that reason, Ethereans put criticism to the Bitcoiners and say that, yeah, you have this predetermined, immutable monetary policy, but is it going to work? They don't believe in it, and I can understand why they take issues with it, because it is one of the biggest complex questions for Bitcoin. I personally think that Bitcoin could do something similar to what Ethereum does with EIP 5059, so that you would have a constant inflation, but you would burn some of the transaction fees, and it is possible to net out the issuance with the burn, so that you could end up with a 0% expanding net issuance. But that would require some more MEV to be inherent in the Bitcoin protocol, so that people are paying a lot to use the Bitcoin system, and MEV is one of the things that can drive up fee prices, and that's another argument for why you would want, for example, a ZK rollup, like what I was talking about previously about Starkware. Like if you had something like that was also like if you had a very big medium of exchange use case for Bitcoin that required block space, then you could pay very cheaply in the second layers, but the base layer would be able to attract fees and get a security budget for itself, and then you could burn some of the transaction fees spent, but still end up at a net negative. Like, these are some theories that I have. I think that we Bitcoiners, we need to be a bit more like realistic and cognizant of the challenges that are ahead if we want to stay on top. I don't think that like Bitcoiners believe like that it's over. Like, the Bitcoin is going to win, all the altcoins are going to die. I think that in order for Bitcoin to stay competitive as a useful medium of exchange that doesn't rely on custodial solutions for transacting with it, then I think that we do need to take notes from the research that we're seeing on other sites. So to sort of get back to your questions, what do I think about the ultrasound money meme? I think it's a very good meme. Like, in the terms of being a meme, it's a very good one. It will resonate with a lot of people. I am though skeptical whether I think that it's a good idea that the meme succeeds, because, as I said, if the meme succeeds, Ethereum replaces Bitcoin as sound money, then we lose so much of the branding and the history and the mythicism around the Bitcoin's concept, like inception, and it's going to be so much harder to get people to have the notion that we even got close to inventing digital scarcity and the store of value asset in the cryptocurrency domain. So for that reason, I think that I ultimately want to challenge the fiat system, and I think that Bitcoin has way better odds at challenging the fiat system than Ethereum would if Ethereum replaced Bitcoin and then tried to challenge the fiat system, because you can't really. So what we're trying to do with Bitcoin is like it's trying to be the Austrian school of economics alternative to the current Keynesian economic landscape that we have. But we cannot really have an Austrian school of economics led revolution when we have store value monetary assets in the cryptocurrency domain that keep cannibalizing and replacing each other. So I'm much more looking future to a vision, a system, a future where Bitcoin remains the dominant store of value asset that remains in that number one top spot position. And I want to see the Ethereum ecosystem grow so that it can revolutionize other parts of the financial sector, so that we can invent new financial instruments. Like, I'm super interested in what we can create with permissionless open blockchains and expressiveness based layers in terms of creating an entirely new financial landscape that I think is going to flourish just in the same way that the internet flourished and changed the whole information, like how information flows around the world. I think that we can do the same thing with open permissionless blockchains. We can do the same thing for finance and bring finance to parity with the technical developments that we've seen overall in technology and in the internet domain specifically.
For sure. And to wrap up, I just want to point out something that you said that I think is interesting and maybe a bit ironic, that it looks like what you're saying is that for Bitcoin to remain the most viable store of value in cryptocurrency, that it needs to adopt some of Ethereum's research and implementations. Like you mentioned, Bitcoin maybe would consider something like EIP 1559 for like burning some of the fees, and it should consider something like a CK rollup like Ethereum has. So it's like for Bitcoin to remain competitive as a store of value relative to Ethereum, it needs to learn from Ethereum to do that.
Yeah, but I have the complex thing is here that I have multiple theories in parallel. Another theory that I have is that, like, I personally feel completely fine with having, let's say I'm invested in Bitcoin and I use Bitcoin as my store of value, and then to transact with it I use centralized solutions, like custodial solutions. You can build. There's a thing called a Chaumian a Chaumian bank, which allows you to transact very quickly and with a very high degree of privacy, but it is centralized. It would be custodial and centralized, but you would have the custodian would have no understanding of what you're doing, and the throughput could be very high. So I could keep 90% of my wealth inside of a cold wallet where I store my wealth, and then I just take some of those bitcoins out into a base layer that isn't, it's not a ZK rollup. It doesn't need to introduce these expressive elements into Bitcoin. It is custodial. I think that would be not the most optimal way for Bitcoin to go forward, because I would like Bitcoin, even in the transactional layer, to maintain the censorship resistant properties. Like that's how, if we were able to get all of those properties, then Bitcoin would be able to become, then we would be able to reach the maximum level of success that Bitcoin is capable of. But there's also a possibility that people are completely fine with just keeping the majority of their wealth in cold storage, and then they use various and with the Chaumian bank, for instance, it doesn't have to be one party that is the custodian. You could have like a multi-sig federation that operates the Chaumian bank, and you would have, quasi decentralization and quasi censorship resistance, like the liquid sidechain to Bitcoin has, for instance. So I do think that there might be another path where Bitcoin doesn't do the things that I want it to do. It doesn't go for the perfect store of value and the perfect medium of exchange with the perfect layer 2 solutions, but it goes for something a bit less. Like it's a very good store of value, and it uses custodial solutions to transact with that have very nice attributes to it. That could also work. So there's many different ways that this could pan out, and I think that's, for me, that's one of the reasons that this space is so interesting, is because there are so many different ways that all of this can play out, and that's why I love my work, so that I can study these trends and try to stay on top of them as they go. But I also do try to push the industry in the direction of what I think would be most beneficial and create the least number of risks for people. Like, let's say 10% of everybody uses 10% of their wealth in custodial systems, and then 10% then that component gets from regulatory. For regulatory reasons, it gets shut down and frozen. That could still be like a disaster for Bitcoin and for the industry and for humans that relied on that system to transact with. So I'm trying to strive the industry towards the direction that I think is going to eliminate the most number, like because I'm personally invested in the cryptocurrency field as from a professional and also a personal from a personal angle, and I want to be in this industry not 5 years, not 10 years, but I want to go in. I want to do this for the long haul, and in order to do this, I cannot maximize short-term things. I have to think about what are the long-term consequences and how sustainable is all of this, and I have to try to stay unbiased and realistic to the facts. And that is a challenging thing to do in the very tribal community that
for sure. I think,
Twitter.
like I said earlier, I think you're doing a really good job in avoiding that tribalism. But I think it would be really disappointing if Bitcoin ended up just relying on custodial and centralized services to transact and to remain as kind of a store of value. So hopefully, more people listen to you and consider things like, CK rollups and other Ethereum innovations, even though that might hurt some Bitcoin maximalists.
Yeah, I mean that's my idea anyway. I'm just trying to apply my understanding to the space and do the good that I can do. But I mean, I can be wrong. I'm just a student of this entire space, like everyone else. I'm trying to learn and trying to evolve my understanding as things go. I don't want anyone to think that I think that I'm an authority of knowledge, or that my opinion is the right one. But I'm allowed to form my own opinion and express it and see how things go. So
No,
I
and
just
it's
wanna,
certainly valuable and super interesting. So we're way over time, but it's been such a fascinating conversation, Eric. So I really want to thank you for sharing all your insights with me. It's been a pleasure.
Thank you so much. Thanks for having me on.